Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a great day. Let's take another look here at Ethereum, see what's going on. Not only do I got a lot of requests for this, but I got a few alerts that triggered here for me. And I want to kind of take a look here and kind of see where we're at with the overall sense here. Okay, so if you're new to the channel, welcome aboard. Hope you can learn a lot here today. Of course, the whole point of me making these videos is just to help ensure you don't get destroyed by moon boys, and more importantly, just kind of learn best practice for situations like this. Well, it's never perfect. Our success rate is fairly high as a community here. With my trade alerts here recently, I sent out SEI, Bitcoin, and Dogecoin longs, and we're in profit on all three of those. Pretty heavy. So good news is there's other opportunities as well in the market, and Ethereum may be one of those, pending we get some good results here when we take a look at the charts. But generally speaking, it's important not to just FOMO into the top here. I do think we might see a slight pullback for Bitcoin. If so, a lot of altcoins could retrace, but Ethereum isn't really looking like one of those, and I'll explain more about that here in a minute. It's got some good patterns forming too. So if you're new to the channel, just hit the like button, comment below. If you've been doing so every time, really appreciate it. You know who you are. You're awesome. You got a special place in my heart. Thank you. Let's take a look here. Left-hand side is liquidation delta. Basically, liquidation for the last 7 days. Delta's next. We basically can see here there's a lot of people shorting this coin at 34.6, upwards about 3,700. Okay. Now, the reason why people do that is because we're coming up close to a local high. A lot of folks will just blindly short a double top. Okay. Now, double tops have a higher success rate, which is true, but you also got to recognize too that liquidation, a large concentration just above that level, there's a decent chance we'll see a liquidation sweep for the price to just shoot up there to destroy any of these late shorts. But please understand that's a real thing. Another thing that's real is the amount of liquidation that's upwards of about 4,000. I'm not proposing we're going to see that right away or at all per se. We do have to cross this threshold about 3,800 first, but the simple way to understand it is there's a lot of liquidation between now and that 3,800, even 4,000, and it's closer to the price action. There's less incentive for the price to go down than up at this point. Market makers make a lot more money when liquidation levels are swept, not because they're swept, but because they can move the price in that direction until they decide to turn it around, right? Again, they're making a lot of money on this. That's why pumping the coin up makes more sense for the moment, considering the overall trend is still up, right? So keep that in mind. Another thing to keep in mind too is that Fridays are notorious profit-taking days too. So wouldn't be surprised we see a quick wick down to get kind of fill into a lower average. So I generally recommend averaging into your position on days like today when profits are due to be secured, just based on the simple fear and greed concept, right? Anyways, liquidation delta, roughly 4 billion. This isn't massively overextended. This is kind of standard and normal. This is pretty low in the overall sense, honestly. I think it could go even higher and we'd be fine. Either way you look at it, there's more people taking longs than shorts. So why short the market when everyone is long? Okay, this is just kind of giving us an indication of the overall strength of longs versus shorts. And there's a lot more longs in the market. And this basically implies a lot of these shorts are going to have a bad day soon. Okay, that's just my thoughts. I could be way off base, but you don't really short into an uptrend. You don't short into a market like this. And even more so, I mean, here's a better analogy. Do you like to drive into oncoming traffic? Or do you get a little worried when you accidentally drive into a one-way street and you're going the wrong direction? I personally don't like it very much. It's a weird feeling. And I don't like that feeling in trading either. What's the point? Why not sleep good at night knowing that you took a trade with confidence and the same direction everyone else is going, instead of trying to go against the grain and be that hero that found that one good trade? Again, there's a lot of Twitter heroes out there, of course, and no disrespect to you if you do that. Day trading is a different story altogether, but most of them turn a little day trade into a swing trade, and that's generally a terrible practice. It's not best practice to do that. Again, most people do that to save trades in the inverse, but either way, we'll talk about that later. So let's take a look here. Open interest, let's kind of just find the heavy concentrations where people are hedged the most. We can see a lot of support at 33.20, and then also about 32.80. So rough estimate 3,300 if you kind of average the largest positions out. And obviously we're omitting the low 3,000 mark because that's further away. But local support is in the $3,300 range. So that's good. That implies we have a lot more support below us than above us. All right, let's take a look here. We can kind of see this also reflecting. Let's double check to make sure. We can see this area here at 33.50 is the local point of control. Again, it's pretty common to see previous highs work as that points of control here. So basically the mid $3,300 range is a likely support range for us, not just with this point of control here, but also with open interest. They kind of work together. They're basically just a volume indication of where the price action's at. That being said, let's take a look at the daily, work our way down, kind of see what's going on here. By the way, these two lines are commonly referred to as a falling wedge. Generally speaking, when you see falling wedge patterns, they break to the upside. Okay. Now again, they're one of the lower success rate type of patterns that break out. So you got to recognize that it's not just going to shoot to the moon because of this one thing. Okay. A lot of folks online, unfortunately, will post, I see it on social media all the time, where they're just posting, bull flag breakout. Again, that should be a contributing factor. It's not the only reason to take a trade. If everything here is bearish, why take a trade on a bullish type of pattern that's pretty much contradicting everything else? It makes no sense, right? So again, I'm trying to make sure you understand that, because I'm not trying to convince you to take a trade here. You should always be doing your own diligence when you trade, and make sure you're convincing yourself not to take a trade, right? You should never be just here like, oh, great, I love this, and this. Because what you do is you create this false sense of reality, and you start realizing that you're tricking yourself into a practice that isn't beneficial. Okay. Anyways, conversation for another day as per usual. I go on sidebars. Apologize. Most people find benefit. Some people don't like it, but I'm sorry in advance if you're not the kind that likes to learn. And that's okay. It's really no disregard or disrespect, because some people just want to come here for the answers. They fast forward to the end and be like, what's he saying? Well, I mean, you're really doing yourself a disservice by doing that, because everything in this analysis is relevant, right? It's not just the one thing, not just the bumper sticker. Okay, anyways, we're right here at 50 on the RSI on the daily time frame, stochastic MACD. It's all kind of right there with it. We have mostly confirming factors here, and the reason why I like this, and I don't love it, but I like it, is because we're tentatively above the 20-day SMA. We close above 3,400 today. I think there's a solid chance we're going to see further upside. Again, this isn't a guarantee, of course. It's just when you're over the 20-day SMA, your odds of success go up. That's all. We aren't above the 50, so keep in mind, breaking above the 50, this descending trend line, 3,600, 3,500 or higher, we'll be in really good shape. Okay, so again, that's more so a daily perspective. You can still trade longs into a daily time frame that isn't fully bullish. I would say, in summary, that daily time frame is mostly bullish. Not completely, not fully, but mostly. Okay. Same thing here with the 4-hour time frame. We also got mostly good confirming factors, right? We got the 50, the 20, the 100, all below the price action. We got this nice little handle pattern here. You could even argue this is a really ugly cup and handle. Those do happen. Basically just letting us know that this resistance here we're getting retested, and the likelihood of breakout is higher. Okay. Again, when you retest those resistance ranges, that tends to occur. So that's positive there. We're also over 50 on the RSI, not overextended. Money flow index is higher. That's always a really good sign. Stochastic swinging up. MACD is converging. There's 8 out of 9, 9 out of 10 reasons to take a long position here, based on just the 4-hour time frame. Okay. Again, another thing to recognize too is this high volume candle here on the 4-hour, leading into this resistance range. Decent chance we see a breakout here. Again, pending that Bitcoin is also breaking out too. So you got to recognize that Bitcoin pulls back right now and rejects off of its local resistance range, then we will probably see Ethereum and other coins pull back. Okay, so you got to recognize when you take a long at the top like this is somewhat of a breakout trade. Those are inherently more risky and less successful. So if we do end up taking a trade, which I'm honestly leaning more towards taking a long right now with Ethereum, you got to recognize there's an inherent risk there. Maybe you want to lower your leverage or position size, something to essentially put you in a position where you're not going too hard and too much, too all in, right? You average into your position instead of just taking a long at the top, right? And anyways, conversation that I like to have with my community members. So I like to reaffirm that. Lagging spans free and clear, conversion lines of the baseline, cloud is good. These are all really, really good signs here indicating further upside, okay? All this combined with a mostly bullish daily time frame and 4-hour time frame, in addition to this, this falling wedge type of pattern that typically breaks the upside, I think we're more likely to see the price continue higher. It just really has that kind of thing. And honestly, of all the coins that have taken off, Ethereum is the only one that's kind of lagging. And I do feel like it's probably going to continue further up. But there's no joke that, we're still in a descending type of trend here. We haven't fully established higher highs, minus the last couple of days. So outside of that, we're mostly there. So anyways, I hope this made sense. I described it correctly. This is kind of just how you should analyze the charts for the most part. Not to say it's a guarantee or, always 100%, but we do average pretty decent success rate. If you're curious about that, I post my results on our Twitter, Telegram, and Discord. Make sure you check out our Twitter, Telegram, or Discord in case you want to stay abreast on play out charts. Discord's probably recommended because, well, not just the signals, but more importantly, we've got a really good active community in here, and I consistently try to post our charts there too, so everyone can learn and grow together. So I look forward to working with you. I hope you have a good rest of your day. Thanks so much again for your time. We'll see you next one. Take care.